Hi and welcome to Academic Compliance Academy of Anti-Money Laundering. So in this video I'm going to talk about the problem of tax havens and money laundering. Most people would think about money laundering when they hear the word tax haven, but what is a tax haven really? Well, it can be hard to define because tax haven or low tax jurisdictions, well, we define them when we compare different jurisdictions to each other. But Mykola Orlov have specified certain characteristics when we analyze and see these types of tax haven that most of us know. So they tend to have a high standard of financial, including banking and commercial secrecy, no liberal currency control, developed infrastructure, available professional help, first of all, from lawyers, auditors, accountants, and financial analysts, and lower standard for the regulation of financial institutions, in particular bank and insurance companies. So all of this should raise red flags when we're talking about anti-money laundering. But what is the actual problem here? Well, the problem is that tax havens are not per se illegal. It's not illegal to have low taxes in your country. It's not illegal to have high-skilled professional help. No, it's not necessarily even illegal to have secrecy, because if you have it within your own jurisdiction, well, you haven't applied to any international law in that sense. So the illegality is hard for us to prove, but we must say that a lot of these characteristics are exactly what we try to prevent, or where the obstacles are when we're talking about anti-money laundering. So what happens if tax havens, low tax jurisdictions, and their characteristics become a part of the money laundering process? So let's see. Well, at the placement level, a tax haven would be an optimal way of putting our money into the system. So even if a highly regulated bank, for example, within the European Union, receives funds from a tax haven, it is hard. You might flag it, but the problem is, would you accept it? You might have a beneficial owner. It can be hard to validate this. It may be structured through lawyers or equivalent that have structured up some legal corporations in these tax jurisdictions that are beneficial owners. So it is hard for us to accept money from tax havens because there's so much secrecy and not clarity of maybe the owners. And it is hard to verify these status. But that necessarily doesn't mean that it's illegal. It might be legal. It might be someone working, living in this tax jurisdiction, wanting to invest in Europe, buy property or other things. This is what makes it hard, because it is not per se illegal to live in a low tax jurisdiction or a tax haven. So it becomes problematic because the placement level, the level of information, we might trust it, we might not trust it, but it's not clear, and hence it can be hard to reject. Furthermore, if you use tax haven in the part of the layering process, it's a perfect layering method because, well, secrecy is a good way of layering your money and tracing back any funds through the financial system. Again, with integration. So when we have tax havens, well, because it's not illegal to live in a low tax jurisdiction or a so-called tax haven, we cannot per se say that funds coming from these jurisdictions are automatically money being laundered. We can say that they are high risk and they expose our system, but since it is not illegal, we cannot reject it. So these tax havens and low tax jurisdictions, they will still be in some way connected to our international financial system, and this is a weak spot. So we need to address it, and we need to really be aware. If we take the extended model of money laundering, the extended model of the stages of money laundering, we must say that the pre-layering process, the stage before even putting the money into the bank or other financial institution, if that also is kind of mixed with the tax haven, it is practically impossible to find the beneficial owners of the original funds before even putting them into the financial system. This is what we see when we see invoice factories, etc. from these low tax jurisdictions. It is practically impossible, and hence putting a lot of work on the legitimate or highly regulated sector, because there should be a lot of red flags, but it is hard sometimes to red flag everything because we need to make it on a risk-based approach. So overall, tax havens are an obstacle when we talk about money laundering. And that is also why typically if we talk about tax havens, people think of money laundering, because there's a lot of wealth, there's low taxes, and there's just something wrong because of the level of secrecy, and especially the non-voluntary disclosure of actual beneficial ownership. But is it illegal? Not necessarily. And this is a conundrum. So this was just a short video on the problem, the dilemma of tax haven, low tax jurisdictions when it comes to money laundering, and especially preventing money laundering. Stay tuned, subscribe to this channel, and let's talk much more about money laundering.